understand some of these, we will step in and answer some of them. So, yeah, overview of the Canadian tax system. Taxes are paid in Canada at every level of government, at the federal level, the provincial level, the territorial levels, the municipal levels. Taxes are paid. A number of taxes are paid in Canada, but I just narrowed them to the few that we can easily relate with, that affect us most of the time, which is the income taxes, the GSTs, the property taxes. Income tax is tax we pay on our income, on our salaries, on our profit if we are into business. GST is goods and services tax. So as just the name denotes, goods and services. When we consume goods and services, when you go to your grocery stores, when you consume goods and services, you pay the GST. Property tax, we all know property tax, right? Property owners. Then for the tax administrators, the key administrator we have in Canada is the CRA, the Canada Revenue Agency. That is the representative of Caesar, right, in Canada. So that is the key administrator we have in Canada. And when it comes to taxable persons in Canada, we have the corporate persons, corporations, they pay tax in Canada. Individuals, we all pay taxes in Canada. Partnerships, when you go into partnership with someone or a group of people to do business together, you pay taxes. Joint ventures, trusts, they pay taxes in Canada. So who should fight tax in Canada? Let's talk about that. Who should fight tax in Canada? Taxes in Canada is based on the principle of residency. Once you are deemed to be resident in Canada, then you are expected to file taxes. Now, when you are deemed to be resident, they look at it, they say, do you have a primary residential ties to Canada? Primary residential ties would be that you have a house in Canada that you can stay, whether it is your own or you rented the house. So far you have a house in Canada you can stay. It's a dwelling place. With that, you are deemed to be resident in Canada and you are supposed to file your taxes in Canada. You have your spouse or common law partner in Canada. Your dependents are in Canada. Your children are in Canada. You are deemed to be resident in Canada. Also, they look at some secondary residential ties. Don't let me bore us with all those technical terms. Let me just say, if you are Canadian residents, you have to file your taxes in Canada. Newcomers coming to Canada as immigrants, you are expected to file your taxes in Canada. Residents of Canada who, you live temporarily, probably you go to some other countries for school or work purposes, but you are still a citizen or PR as the case may be, you are expected to file your tax in Canada. Also, non-residents that earn income from Canada. You are not even a resident of Canada, but you earn income. You are working for an establishment in Canada, and you are earning income from Canada. You are expected to file your taxes in Canada. The international students, you are here to study, right? But sometimes we still work. We still get few things, support from work here and there to be able to support our fees and all. As far as that is concerned, as far as we are earning those income, international students, we are expected to file our taxes in Canada. Now, looking at some of the key compliance obligations, I will just quickly go over this. Filing deadline. When am I supposed to file my taxes in Canada? Now, when you are filing your taxes in Canada, someone may even be asking me, what is the meaning of filing my taxes? What is in Nigeria? What is there? We don't file tax in Nigeria or any other country that we're coming from. We don't really file taxes. So what do you mean by filing my taxes in Canada? So when you are filing your taxes in Canada, what we are saying is that you are just disclosing, you are demonstrating, you are showing to the CRA that for the last fiscal year, January to December, this is the income I have earned in Canada. Then, number one. Then, number two, there are some deductions that the tax laws have permitted me to be able to enjoy. These are those deductions. The funny thing is that CRA will not tell you what those deductions are. So, and that's why sessions like this are important. You are the one showing to CRA that these are these deductions that the tax laws have permitted me to be able to enjoy. You put it on the form, right? The next thing, another thing you are showing is that these are my tax credits. The tax laws have also permitted me to be able to take advantage of some tax credits. These are the tax credits. Based on my unique circumstances in that previous year, I'm showing it to you. And you will send it on that form. You may make it a paper form. You may do a software. We all know those softwares, right? We still get there. And send it to the CRA. And CRA will now review and say, okay, this is the income. These are the deductions. These are the tax credits. Okay, we are fine with it. Good. This CRA will now assess, do you have some tax that we have to pay back to you based on the taxes you've paid before? That is when we talk about tax refund. Or are you even owing us more? Or have you claimed some deductions and some credits that you are not supposed to claim? So because of that, you are owing us. Then they issue you a notice of assessment to say, this, we are in agreement or we are not in agreement. Come and pay the balance or get your refund. But those deductions, credits, they are important things for us to actually note, and we'll be talking about them shortly also. So when it comes to filing the taxes for individuals that are in paid employment, by April 30 every year, we must have filed and must have paid any taxes outstanding that we need to pay. In fact, I really appreciate the leadership of this church for permitting us to have this section now. Because sometimes during the filing season, we have different sections. And within me, I was like, this is just information based. Because really, what can we do again? But now that we are in the course of the year, we can start taking advantage of some of this knowledge to prepare ourselves appropriately for the coming filing season. And we are able to take maximum benefit of our refund, you know. So filing deadline, like I said, paid employment, June 30, please. We have to ensure that we file for people in paid employment. Then if you are in business, you have a business that you do on the side. And in Canada, you don't have to register your business before you say, before CRA, we expect you to file taxes for that business. You don't have to register. Even if they are not registered businesses, you are doing your hairdressing on the side or some, different kind of business, sewing, side hustles. Thank you, sir. CRA expects that we declare them for tax purposes. So if you are in business, if you are doing all those, you are sent to be in business, and by June 15th of every year, you are supposed to file your taxes. June 15th. Even though by April 30th, you are still supposed to make payments. But by June 15th, you have to file your taxes. Then for people that have corporations, you have companies, incorporated companies, right? The limited, the something limited, something INC, incorporated, you know what I'm talking about. So for people that have incorporated companies, then we have to file our taxes within 6 months after our corporation year end. So if our corporation year end is in December, then before June of the following year, we're expected to have filed our taxes, right? Now, another important concept I want to talk about is tax installment, especially for people that are into business and people that have corporations, companies. So if you are in a paid employment, you don't really have to do any tax installment. You don't have to make any tax installment to CRA because your employer is already deducting the taxes on your paycheck every month and they are remitting to CRA. But if you are in business of your own or you have a corporation, a company, and the tax for last year was 3,000 and above, and you estimate that the taxes of this year will also be more than 3,000, CRA will expect that you start in a monthly installment payments of your taxes. For example, if you estimate that by the end of the year, last year your taxes was 3,500, you estimate that by the end of this year, the corporation or the business tax will be 4,000. CRA expect that every quarter by the March 15th, June 15th, September 15th, and December 15th, you are making those payments in installment. So you can make it in full installment, like 1,000 March 15th, 1,000 June 15, September 15, 1,000, December 15, 1,000. And at the end of the year, you will now do those adjustments when you are filing your taxes. If you do not do these installments, CRA may pick you up for some interest and penalties. So just for us to note that. Now, when we are talking about taxation of individuals in Canada, let's look at some types of incomes that CRA expects that we disclose and would show to them when we are filing our taxes. So there are 5 categories of income. So we take them one after the other. The first one is the employment income. So for those of us in paid employment, our employment income is the salaries, the wages. Do you even know that for some of us that work in places where we get tips are taxable in Canada? So, commissions that we get. So those are part of our employment income. The good thing is that for most of this employment income, we don't really have to do a lot of documentation because the employer would have prepared our Form T4 at the end of the year and given it to us for that employment. So we just have to go on the software and the information on the T4, we just put them at the appropriate boxes of the software. That's one category of income. The second category of income that we have to file is our business income, and that is for people in business. So if you have a side hustle or you have your business, whether you register the business or you don't register it, so far you have something you do on the side and you are making income, you are expected to show it, to demonstrate it to CRA when you are filing your taxes. But the good thing also is that you are not filing the income. You are paying tax on the profits, right? So you are expected to still deduct your expenses that you have incurred in the process of getting those income. You are able to deduct them, and whatever you have left as profit is what you are paying tax on. What are these kind of expenses? We get to it shortly. The next one is property income. Property income, some people also call them passive income. These are like your interest income, your dividend income, your royalty, your rental income. I will quickly talk more on rental income, because interest income, dividend income, and royalty income, we don't really have to keep proper records of that, because the financial institution that is giving us interest or dividend on those investments, they are expected to generate a form we call Form T5 and send it to us at the end of the year, which we use to file the taxes. So I won't talk more on that, but I would like to talk on rental income. So rental income really is for most of us that have investment properties. Whether it's separate house, distant from the one we are living in, that we are giving out, on rent, income we are generating from that property, we're expected to distribute it for tax purpose. Some of us, we have a living basement, secondary unit basement that we have let out. So income that the tenants are paying are supposed to be, shown or filed for tax purposes. But you are also able to deduct some expenses. So I will quickly flip through my slide and talk about some of those expenses. So you are able to deduct your mortgage interest, because mortgage interest is seen as part of the expenses you are paying on that property. So I did not say mortgage repayment every month. I said mortgage interest. Because in my conversations with a lot of taxpayers or individuals, they will say, now I've paid this mortgage every month. I've paid 20,000 this year. Why are you deducting only 15,000? No. What we are permitted to deduct is the mortgage interest, not the principal portion of your repayments. Your principal portion of the repayment is going back to reduce your capital. So that is a capital expense. So it is the interest that the bank has charged on you repaying back the loan that you have taken from the bank. That is what we are able to deduct from your rental income. So your mortgage interest, your property tax, your insurance, your utilities. What again? What other expenses do we incur? Internet, utilities, yes ma'am, internet. Things like that we incur just to maintain that secondary unit we have given out on rent or the other house. We are able to deduct them as expenses. Now, if it is the basement that we are giving out on rent, we cannot deduct all those expenses. We have to prorate it. So if the whole house is what we are giving out on rent, then every expenses relating to those things we have mentioned, we can deduct them 100%. But if just the basement, those expenses will be prorated. Let's quickly look at this case study just for us, because I know some of us we do a lot of this, so I want to talk on this so that we understand what we are talking about. Let's look at this case study. Mr. John Boo holds a semi-detached house in Canada. He resides on the main floor and rents out the basement. The total area of the house is 1,800 square feet, with the basement being 500 square feet. Mr. Boo earns 1,500 per month in rental income from the basement. His annual expenses related to the property are as follows: mortgage interest, 20,000; property tax, 3,100; insurance, 1,200; utilities, 8,400. What are we trying to do? Calculate Mr. Boo's taxable rental income for the year. So what is the portion of that 15,000 that CRA will collect tax on? And this is what will be done. Now, the first thing Mr. Bull has to understand is that he has to know the basement area as a percentage of the total house. So what is the percentage? What percentage of the total house is the basement occupying? 500, which is the square feet of the basement, divided by 1,800, which is the square feet of the entire house. That is 28%. Okay? Now, rental income Mr. Bull has earned 1,500 for 12 months. So 1,500 multiplied by 12, 18,000 rental income. Now, what are the deductible expenses? Number one, mortgage interest, right? 20,000. Property tax, 3,100. Insurance, 1,200. Utilities, 8,400. Everything, 32,700. Mr. Abu cannot deduct the entire 32,700 because the entire house is not on rent. It's only the basement. Now, the portion allocated to basement is the 28% based on that area space that the basement is occupying. So 28% of 32,700 is 9,083. And that is the expenses that Mr. Abu is going to deduct from his 18,000 income and pay tax on 8,917. So I just want to explain that to you. So that because this confuses people a lot in the conversations, I'm paying, why should I be paying tax on my investment? I'm not taking so much. This is what CRA will do. Now, another expense you can claim on this basement, is, we call it tax depreciation. That is compensating you for the wear and tear of the house. So that can be claimed to further reduce the 8,900. But if you claim it, there is something you have to be conscious of. By laws in Canada, we call something primary residential exemption. Meaning, if you are living in a house, that is the house you are living in, you have lived in that house for a number of years, and you decide to sell that house in the future, whatever gains you are realizing from the sale of that house, 100% can be exempted from tax. But if you decide to claim the tax depreciation on that basement, you will pay tax on some of those gains in the future. So it is there. You can bring it down, but just for you to know that Caesar is waiting for you in the future to collect its taxes back when you sell the house. So this is just to give us an understanding of how the rental business or rental properties operate in Canada. Let me quickly leave that and go back to the income that can be considered for taxes. So we've talked about property income. I'm good with that. Capital gains. Capital gains will be, now when we have investment properties and we sell them, right, and we make profit from it, 50% of that profit is called capital gains, right? So the entire profit is called capital gains. But 50% of that profit is called taxable capital gains. So 50%, CRA will say, put it on your income and come and pay tax on that 50%. The other 50%, don't worry. You have really, really labored on this house. You can go with it. We are compensating you for your troubles with your tenant, your investment on the house. You can go with it. But 50% of that profit, CRA will say, add it to your income. You are not paying 50% as tax. Oh, I have to note it. No. Because people make that confusion a lot. They will say, when you sell the house, you are paying 50% as tax. No. 50% of the profit is what you add to your income. Now, we now look at your marginal tax rate, depending on the income brackets that you are in Canada. Let me show us something briefly. Hopefully, I've not taken it out. Now, this is the tax bracket in Canada as at 2025. Now, let's assume for this man, the total income for this man that has sold his property is 120,000 per annum. 120,000. For someone on 120,000, at the federal level, what tax bracket is that individual? 26%. 120,000 is on 26%. Okay, so 26% at the federal level. At the provincial level, what tax bracket is this individual? 10%, right? 10%. So that means the total tax rate of this individual for that year is what? 26 federal and 10% provincial, making 36%. So on the 50% of that profit, this individual will now pay 36% of it. So if you have questions, let's just note our questions because of time. So do we understand now? So we are not paying 50% as taxes. No. But it's 36% of 50%. Yeah. So, and the last part, are we finding it informative? Okay. So the last part of income that we are supposed to declare for tax purpose is what we have on other sources. And mostly they are retirement income for our seniors, the CPPs, the OAS. OAS is old age subsidy. So we talk about it also, we talk about them also. But for our seniors also that earn Canada pension plans, they earn their pension, they earn from registered retirement savings plan. They also earn their income from RRSP. They are part of the other sources, which we have to now also file when we are filing our tax returns. We have looked at this case study. We have looked at the tax bracket. Because of our time, let me quickly talk about business income. You know, we are talking about it that one of the income that we're expected to show for tax purpose is our business income. That is for people in business. And we have established the fact that you are not paying tax on your income. You are paying tax on your profit. Now, what are those expenses that you can deduct from your business? The fundamental rule is that as far as those expenses have been incurred for the purpose of you generating that income, you can deduct it for tax purpose. So, your supplies and office expenses, you have to buy some supplies in the business, you can deduct it for tax purpose. You know, your business promotion, you have to do some website, promote advertisement, promote your business. You can disclose it for tax purposes. You can deduct it. You have to travel. You want to go on business trips, right? Or some courses. There are some courses that relate to the business that you think it's good to educate yourself more so that you can continue to offer value to your clients. Or, you want to go on some course, on some trips for the business. 100%, you can deduct it. Just keep your receipt. Meals and entertainment. You are going out to for business meetings, talk to clients, talk to people, or you decide to say, I want to take my client out to see some hockey games at BMO Center, downtown, or you want to do this, you want to do that. It's for the purpose of promoting your business, right? To continue to get the confidence of your client, to continue to get their patronage, business expense, right? Your rent, if you decide to rent some places you use for your business, 100% deducted. Membership, you belong to some professional bodies, and those professional bodies are relevant to the business that you do. And you pay them subscriptions, you pay them all those, 100% deducted. You took some loan from the bank or some line of credit for the purpose of running your business. You are paying back interest, bank charges, 100% business expenses. You are making donations. Beautiful. I love to talk about this. Donations to charity, right? Government also recognizes the fact that you are able to donate to charities from your business income, right? I've made so much this year. It's got I have that inclination to donate to charities. Good thing is that church is also part of charity. Yes, sir. So church is also part of charities in Canada. You want to donate to Jesus Palace from your business. The only thing is that you just tell Mrs. Akinade, please, just ensure the tax returns is issued in the name of my company, in the name of my business, in the name of my company. That is all. 100%. It can be deducted. But you cannot say you want to join a political party and deduct it from your business. No. So charitable donations. Charitable donations. Professional fees. You employ the service of an accountant, of a lawyer, of a bookkeeper to be able to prepare your books for you. 100% deducted from tax. Deducted. You pay some insurance, telephone and internet subscriptions, property tax possibly you are making. Okay, I will talk more about that later. Salaries and wages. You are paying salaries to some people that are supporting you in your business. 100%. Motor vehicle expenses. You have a dedicated vehicle you use for your business. And you are paying for servicing, you are paying for fuel, want to change your winter tires for the vehicle that you are using for your business, solely using for your business. You can deduct it, 100%. Don't let me talk about CCA because of time. Repairs and maintenance, conferences, you need to attend some conferences, 100% deducted from your business. So they are much more than this, really. These are just to give us some kind of understanding as to what we are talking about when we see business expenses that you can deduct. But the fundamental rule is that as long as those expenses are incurred for the purpose of you generating your income, you are able to deduct them. Now, we're still talking about businesses. So this slide, is there for a particular audience I was talking to recently on tax issues, but I just like to also put it here also. We never can tell. We can build our business to the extent that we may start thinking of, possibly I want to employ someone from outside the country to do some services for me and all. It could be complicated. But when those contractors are from tax treaty countries, so there are some countries that have tax treaties with Canada, right? So based on the rules of those tax treaties, they are the tax rules are a bit friendly when it comes to employing people from those countries to support your business, right? So you can do that. And the good thing is that Nigeria is part of those countries that Canada has tax treaty with. So, I don't want to talk more about this because I don't know if I'm alive. I'm live. But the good thing is that you can employ people in Nigeria to support your business, and you can consider it for business expense. Motor vehicle, you can buy motor vehicles in the name of your corporation, of your business. So far, the vehicle is being used 100% for the business. You are able to claim, all those expenses. But we have to note that CRA, in the event of any form of audit or review, they may want us to show what they call a log of your trips. Where have you gone to this year? Show it to us. They won't ask. They won't just ask when you're finding your taxes or something. But in the event of any review, they may ask. So just for us to know. And what is the car log? What will it show? I move on this day. I went from this place to this place. This is the kilometers. And this is the reason why I went there. Something like that. Donations to charitable organizations, we've spoken about that. Home office business expense, I would like to talk about this also. For some of us that we do the business from our house. So if we have a dedicated place in the house we use for the business, we are also able to claim some of the expenses ordinarily relating to the house as business expense. Things like our rent, our mortgage interest, our insurance, our utilities, they can all be aggregated together. And depending on the percentage of that place we use, similar to the case study we did the other time, depending on the percentage of the space in the house we use for that business, we just apply that percentage on all the home-related expenses and claim them. When I say home-related expenses, someone is thinking, how will even include my grocery? Grocery is not part of it, though. So just our house rent, interest, our utilities, insurance, property taxes, internet and the likes. We can include that. Another one I like talking about is income splitting. This is another very, very good concept, especially to optimize your taxes for people in business. You can adopt income splitting approach. And what is income splitting telling us? Rather than taking all the money from the business out in your name, which will cause you to jump into a very high tax bracket. Why can't we? I'm sorry for the for that. Sorry for that. I'm sorry. Okay, so talking about the income splitting arrangement. So you are into business, whether corporations or you have a business of your own. Rather than taking all the entire money out in your name, and you'll now be paying 40%, 36% to CRA. Why can't you look at the tax affairs of everybody in your household, of your spouse, of your children, when they have reached some age, like possibly 13, 14, and give them some roles in the business? My child is doing my bookkeeping for me. He's keeping track of my expenses every month. And channel some of those income as salary to them also, so that at least you are able to now move your portion of your income that would have been taxed at that high tax bracket to those other ones that possibly they are still on the low tax bracket. Do you understand what I'm trying to say? Do we understand it? Income splitting is a very good approach that can, family-wise, that we can use to optimize our taxes. Now, let's look at some deductions. Hey, time. let's look at some deductions that we can also take advantage of to be able to reduce our taxes in Canada. The first one here is some tax-deferred savings plans. And I will talk about RRSP here. RRSP is Registered Retirement Savings Plan. So we have different retirement plans in Canada. Government managed plan. RRSP is more of an individual plan, really. So we all know the government management, the CPP, Canada Pension Plan. Once we are working, you have that obligation to, remit the CPP. The employer would have deducted it. But statistics have shown that CPP is never enough to plan for retirement in Canada. For someone that have started working in Canada from the age of 18, and the individual is 65 years old today, and has retired today, and is taking pension from CPP, the maximum amount of money that individual can take is $1,433 every month. $1,433 every month, the maximum. And you have started working since age 18. And most of us, we came to Canada when we are what? So now think, if the person that has been in Canada since age 18 and started working since then and retired today is any 1,433 from CPP, how much do you think it will be any? The average individual from CPP is earning about $854 thereabout today from CPP. So that has shown to us that CPP is never enough to plan for retirement in Canada. And I know that as individuals, we can have different ways, different approach we want to use to manage our retirement. But one of the ways we can also consider if we want to save in a tax-efficient way is Registered Retirement Savings Plan, RRSP. And that is you taking money and opening an RRSP account and contributing into that account. You can open it with any financial institution of your choice. The good thing is that we also have financial advisors in the house that can help you to set it up. Mama Beji, Sister Priscilla is one of them. We can set up those accounts. And the good thing is that when you set up the account, anything you contribute into that account can be claimed as tax deduction. And you will be able to get a refund when you file your taxes. What do I mean? You earn an income of $100,000 per annum. You have so much room in your RRSP. You put $20,000 into your RRSP to be able to save for retirement. So when you are filing your tax returns and you tell CRA, I have put $20,000 in my RRSP, CRA will say, okay, fine. You will no longer be taxed on $100,000. You will now be taxed on $100,000 minus $20,000. You will now be taxed on, what's that, $80,000. For someone in Alberta, if you are earning $100,000 per annum, your marginal tax rate is 36%. So the implication is that 36% of that $20,000 is what you will get back instantly as tax refund. So you are using one stone to kill two birds. You are saving this money. Well, you can also put it in some other investments. You can do business and all. But possibly you have decided to put it to your RRSP. So you put it to your RRSP, saving towards retirement. It's not just sitting there doing nothing. It's also yielding interest. It's growing every month. Every year it's growing. And you're also able to collect instant tax refund from CRA. That 36% that you collect, you can even return it back to RSP or use it to do some other things that you want to do. I wouldn't know how many investments you want to do that will give us instant 36% today, right? So that is that. Another one that we can consider under things that we can do to reduce our taxes would be first home savings account. And that is a very, very good account, especially for people that have not bought their first house in Canada. So if you have not bought your first house in Canada, please quickly go and open these accounts. It's a very, very good account that you can take advantage of tax-wise. And in the sense that for each one of us, both if you are married, both the wife, the husband, you are entitled to save up to $8,000 into that account. So as you are planning to buy your house, you have some money you want to use for your down payment and all. Rather than just putting in a regular bank account, put it in your first-time savings account. When you put it there, you get the instant tax refund. Going back to our analogy, for someone earning $100,000 in Alberta today, tax rate is 36%. Marginal tax rate is 36%. 36% of $8,000 by mathematics. 2-4, right? 2-4, right? You get 2-4 back from the government instantly because you have saved 8,000 planning for to buy your first house in Canada. Like I said, the wife can open it, the bank can open it. For some of us that we are just coming into Canada, and God has helped us to get our house, to get a stable job, and we are working now. Your pension that you are doing in Nigeria, CPP, 25%. Do you know that you can collect 25% now that you have left Nigeria? Collect it. Put it into your first home savings account. Get your tax refund and start planning for your life also here in Canada. Those are some of the things that we can also consider to optimize our taxes. CPP, that comes automatically from our paycheck, and it comes automatically. Home office expenses. If you're also making use of your house, that is for people that work from home. So if you work from home, and you work from home for at least 3 days in a week, then at the end of the year, just tell your employer to give you that form T200, and they will indicate on that form that you work from home. So all your expenses, those expenses we have mentioned the other time, with the exception of mortgage interest though, your interest, your utilities, your rent, your utilities, you can prorate it also and claim them on your tax returns to reduce your income. And as you are reducing your income, you are also reducing the taxes you are paying. Scholarships are not considered for tax in Canada. We're not supposed to pay tax on that. Spousal support, that's for people that provide spousal support to their spouse. Probably they are separated and there is a court judgment, or there is an order from the court that they have to support, and they have to pay monthly. For the party that is paying, he can claim that as the deduction when filing the tax returns. You pay legal and accounting fees to object an appeal. Probably CRA sent you a notice of assessment. You are wondering how can I go about it, and you employ the service of an accountant to help you. Expenses incurred in doing that, you can claim it as tax deduction. Moving expenses, another one. You are moving from where you currently live to another place for the purpose of you are changing your job or you are starting another business. So all those expenses, please keep track of them. You can discuss with your accountant, and you're able to claim them as business expense. You're able to claim them as deductions when you're filing your taxes. Another important one is childcare expenses. We put our children in daycares. We put our children in day homes, just for us to be able to go to work, go do our businesses and all. Those expenses, you can claim them as tax deductions when you're filing your tax returns. And as you are claiming them, that means you are reducing the tax payable for the year. Now, one thing we have to note is that childcare expenses can only be claimed, if you are married, it can only be claimed by the lower income earner of the husband and the wife, or both. So the lower income earner can claim it. But the higher income earner can only claim if the lower income earner was possibly in school at that time during the year. But it's mostly claimed by the lower income earner. Disability support deductions, that is for people with special needs, and you are now trying to get some tools, instrument to support. That individual is trying to get some tools, instrument to support them to be able to do their work or do their businesses. They are captured under disability support deductions, and they are able to claim them also as deductions to reduce their taxes. EI repayment, I will not talk about that now because of our time. Now, union and professional dues. For some of us that we have to pay some dues also based on the virtue of the professional organization we belong to, we are able to claim them, to optimize our taxes. Some other deductions here, because of our time, I will just go to the very important ones. For some of us that we are in an employment where part of the benefit is to receive stock options, you may have to start speaking to your accountant for him to review those documents to see if you can claim some deductions from that. I would also like to talk about loss carryovers. That is for people in business. So if you are in a business, you made a loss last year from a business. Business that are not incorporated now, it's not a company, it's not INC, it's not limited, just regular business. You may register it at the registry, you may not register it at the registry. But you made a loss on the business last year. That loss, let's say you made a loss of 10,000 last year. This year, your total income is 80,000. The loss of last year can be carried over into this year to reduce the 80,000 to 70,000. Rather than paying tax on 80,000 this year, you are now paying tax on what? 70,000. So loss carryovers for some of us, just keep your receipt and be sure that your records are fine. Then you're able to claim it. for if you have people that live in northern territories also, for people that are living in northern territories, we all know how northern territories could be, right? Remote places, it will be very cold and all. For those kind of people, there are also special deductions that they can take advantage of to reduce their taxes. Time, I'm sorry. Hey, I'm so, like how many minutes more? Let's go. Okay, sir. Now, another one I would like to talk about is that those are the deductions. Now, let's talk about the credits. Credits are also very important. Tax credits are also very important to be able to optimize our taxes. Okay? Now, for most of these tax credits, they have base. For example, we can say the personal basic amount, which is the first tax credit in Canada, it was 15,000 last year. I think this year is 16,195 or something, about 16,000 this year. So they have bases attached to them. So the tax impact that is coming to us is 15% of those bases. Because I was talking to a guy one day, he just bought his house. I was saying, there is a credit, home buyer's amount that you can claim, 10,000. The guy was excited. I'm collecting 10,000 back from CRA. But apparently the accountant did not explain to him very well. Thank God the guy has now put himself into some troubles, spending money that you're not said. And eventually he collected 1.5. I was like, but you told me 10,000. No, it is 15% of the base. So it is 50% of the base attached to those credits that we claim back from the government. So let's look at them. The first one here is basic personal amount. For basic personal amount, it comes automatically on our tax returns. It comes automatically. You don't even have to worry about yourself about it. Once you are filing your tax returns, it's just the first part of your salary that can be exempted from tax. I said last year it was about 15,700. This year is about 16,129, something like that. At the federal level, in Alberta, at the provincial level, is about 22,523, thereabout. So if your income is within those amounts, you are not paying tax. And that is why if you want to adopt income splitting arrangement for some of your children, you can keep whatever you are allocating to them within those range, such that they are collecting it, they are filing the tax, but they are not paying any taxes. Okay, I'm not saying that, I'm just telling us that we can employ them genuinely, you understand, right? That's what I'm trying to say, that we can really employ them, right? And give them salary. Okay, now, some other ones that will not come automatically that we have to know and remind our accountant when we are filing our tax returns. Spousal or common law partner, that is this is for married people, if one of the partners, one of the couple is not or didn't work that year, right? There is an additional credit that the individual working can claim. So let's just note it. Or if the income of one of the couple is below that threshold that I've spoken about, 16,129 at the federal level, 22,000 at the provincial level. So if the income of one of the partners is below that threshold, then there is a credit that the individual getting the bigger income can still claim. So just for us to note. So that is the spousal common law partner. Then this other one is for single parents now, so that have the children living with them. So for single parents that have the children living with them, probably widowed or separated, but they have some of the children living with them. And those children are within the age of 18 years. So there is an additional tax credit also. So that's 16,129 that they would have claimed under the basic personal amount will now be claimed twice for them. 22,523 that they can claim under provincial will be claimed twice for them. These are some of the information that your accountant may not be privy to. So honestly, that we have that knowledge and we let them know so that they can indicate it when we are filing our tax returns and we are able to claim the full refund from the government. Canada employment amount, age amount, those ones, Canada employment amount comes automatically on the tax returns. It's about 1,433. But don't forget, 15% of that is what we are getting back. So age amount is for, our seniors, 65 years and above. There are some credits, about 8,900, thereabout, that they can also claim when they are filing their tax returns. EI, CPP, automatically. They come on our tax returns. Medical expenses don't come automatically. We have to be the one to agree them together. And we notify our accountant. So if you have incurred any form of medical expenses in the year, for you, for your spouse, for your children within the age of 18 years, you can aggregate everything together and claim it on your tax returns if it is within a particular threshold. So, but it's available for us to claim. Home buyer's amount, that is for people that are buying their house for the first time in Canada. So when you buy your house, that year you bought the house. The following year when you're filing your tax returns, you can claim home buyer's amount as part of your tax credit, 10,000. Is it 10,000? How much is it? Thank you. So you can claim that when you're filing your taxes in Canada also. Adoption expenses, you're spending some money to be able to, also adopt, we can also claim them as credits when you're filing our tax returns. Charitable and political donations. So for individuals, they can actually claim charitable and political. Business can only claim charitable. They cannot claim political. But individuals can claim both charitable and political. So I sense government is trying to encourage us to, also go into politics, right? So we're able to claim those. So our charity, our tax receipt, that's why church is always telling us at the end of the year, put in your records appropriately to be able to collect your tax receipt. And this is another very important, another very, interesting topic that I've had with people when it comes to charitable, when it comes to tax receipts and using it to file your tax returns. But I don't want to go into that because of our time today. But let's just note that we are able to use all the tax receipt that we get from our donations to church and other charitable organizations, not the church, not just church, right? We're able to agree them together and file it when we are submitting our tax returns. Tuition tax credit, I would like to talk about this one also. That's for people that are in school, right? So their tuition, what they have paid for that year, they can claim tax credit on it also. 15% of it is coming back to them as tax refund. But the part I would like to talk about is when you are a parent and you pay for the tuition of your children and they are in school. So the tuition form is issued in the name of the children. Ordinarily, the child or whichever the children, as the case may be, should be the one to claim the tax refund on that tuition. But government permits you to claim maximum amount of 5,000 from it per year. So you have paid 12,000 for the tuition of your child for that year. The tuition form has been issued in the name of the child. So 5,000 from that tuition. And don't forget, most of the time, that child may not really be able to use it that year because they are in school. They are not really doing so much. Even if they are earning income, possibly the income they are earning is between the threshold that we've spoken about, 16,000 at the federal level, 22,000 at the provincial level. So they may not be able to use it. So they are able to transfer 5,000 to the parents. They keep the 7,000 till the future when they're able to use it, when they start working. So just for the parents to know that also. Interest on student loan, we are also able to, when you take some government loans for school and you are paying interest, we're able to claim that as tax deduction. Canada training credits, it's also a very important one. That's for people that are in school. The amount is $250. For this one, it's absolute, $250. You can claim it on your as tax refund. If you have gone to school or you have written a professional exam that year, $250 can be claimed back when you're filing your tax returns. Dividend tax credits, that comes automatically. And if we have children with special needs also, we're also able to claim what we call disability tax credits in Canada. The only thing we need to do is just to get our family doctors to prepare the applicable form for us, which we'll send to the CRA. So with that, CRA will review and approve. So there are some credits that government has also prepared to be able to support families, with special needs children. Disability tax credit. You can also claim Canada caregiver credits. We can also claim a disability supplement for that. As we also talk about the credit, I think I will possibly stop here and talk about this slide, like in few slides down. Some other things that we can note. Contribution to spousal RRSP room. We have said RRSP room is registered retirement savings plan. So let's assume that you have maxed out your room in a year. Okay, so we have rooms. What do I mean by room? You cannot just, when I was speaking about RRSP the other time, registered retirement savings plan, you cannot just open the account and be putting money there as you like. You have to put the extent of the room you have. Every year we have, the room is 18% of your prior year income. Are we following me? I hope I'm not boring us with this, my plenty talk. Okay, so this room is 18% of the prior year end income. End income is our salaries or our business income. So prior year end income, 50% of that is the room that we have. So we can save up to that in our RRSP. So let's assume that we are saved and we have completely utilized our room for that year. And we still have some more money we want to save for retirement. And our spouse has room in their own RSP account. We can then save in the spousal RSP account also. But when we put money in the spousal RSP account, the refund is going to the spouse. But we are family now. If it's going to the spouse, it's going to be family now. So, so just for us to know that that option is also there for us to optimize our retirement plan, retirement savings and all. Home office expense, we've spoken about that. I've spoken about this. I won't want to talk about it again because of our time. For some of us that are new to Canada, I mentioned two forms, T4, T5. The common one is T4. So this is an example of what a T4 looks like. T4 is just a form that is issued by employer to you, showing what income we have earned in the year, the taxes the employer has deducted, the EI is employment insurance, CPP, Canada pension plan, they've deducted, which we then use to file our tax returns. So there are different softwares out there that we can use to file the tax returns. Different softwares. You know, we can begin to name and name. There are some of them are free, some of them are paid. So for some of us that have just only T4, it is very easy to file. For some of those softwares, we have H&R Block, we have TurboTax, we have Wet Simple, name them. A lot of softwares out there, right? So the way those softwares are designed, they have been designed in such a way that it is easy to match the boxes, the box number on the T4 with the box numbers on the software. So if on the T4, for example, on box 14, you have 86,605, you just look for box 14 on the software also and type it there. You are becoming a tax accountant. So that is the idea with tax filing in Canada, just for some of us that we are new to the system. The final part I want to talk about will be the benefits. Daddy, can I continue? Okay, I will just run through the benefits. So I have tried to categorize these benefits under 5 buckets in Canada. There are some that are centered towards family and children. There are some that are centered towards low income and cost of living, to reduce our cost of living. Some centered towards employment and job support. Some towards students and education. And some centered towards seniors. So because of time, I won't talk through everything. I'll just talk about the very important ones, or the ones I feel can be more useful. Canada Child Benefits, I think we all know that, right? It's just to support us with families taking care of children. And when you are in Canada, when you are a citizen and you are a PR, you are able to get your Canada Child Benefits. Right? And if you are here on a temporary work permit, for the first 18 months, you may not be entitled to it. But on your 19th month, and your visa is still valid, you are entitled to Canada Child Benefit. Another set of people I want to talk about is that for people that are on a refugee status, you will receive a positive notice of decision from the Immigration and Refugee Board. From that date, you are able to claim Canada Child Benefits, just for us to note. And another thing I would say is that, for this benefit, for most of the time, the first 2 years are possibly the years that you may be entitled to the maximum amount. After then, because it is paid based on income, right? So as income is increasing, it's dropping. At the first year, for most of us, we are converting our Nigerian income to Canada when we are filling that form. When you convert it, what is there? So you are able to get the full benefit first year. Second year, possibly you got your job July or you got your job August. You don't have that big income for that year. The following year, you are still able to get that full benefit. By the third year, you start getting those big salaries in Jesus' name. The benefit is coming out. But those first 2 years, I want to encourage us. Let's make good use of it. One of the ways we can make use of it is open a registered education savings plan for the children. Put substantial part of it. Pump that savings into that for those first 2 years. Pump into the registered education savings plan. As you are putting it there, the government is also adding 20% to it. And you are using that to save towards the tertiary education of your children, which is very important. Yes, sir. Okay, so another one I would like to talk about would be the Canada Dental Care Plan. Just for us to know under the family and children benefit also. For some of us that, the family income is within 90,000, not more than 90,000. Our provincial health plans doesn't allow us to take advantage of dental solutions and all. But with this Canada Dental Care Plan, we can apply for with this plan we can apply for the benefit to the government, and we can go for dental examination and all. So if the income is within 90,000 as a family, we are able to do that. So some other ones targeted towards low income, GST and HST credit is one of them. GST and HST credit is a tax-free quarterly payment that helps individuals and families with low and modest income offsets the GST that they pay on their groceries and all they pay GST on. So for this one, once you are 19 years of age in Canada, you are able to enjoy GST. Your income, once as an individual, if your income is now above 56,181, you are no longer able to enjoy it. As married with no children yet, if your family income is more than 59,481, you can no longer enjoy this. But if you are with children, depending on the number of children, if the income is above 74,000, then you may not be able to enjoy it again. Canada Housing Benefits. This is another one I would like to talk about. For the Canada Housing Benefits, especially for people that have not bought their first house in Canada, or are just buying their first house in Canada, let's take advantage of some of these government plans when it comes to housing benefit. The first one, MHRTC. Let me go to this slide, please. Okay, so home accessibility tax credits. Just for us to know that if we need to make some renovations to the house, to make the house easily accessible for our seniors or any child with a special need. Any expense we incur for that purpose, we can file it for tax purpose as credits. Multi-generational home renovation tax credits. If we need to create a secondary unit, probably a basement or another unit in the compound or whatever, but a secondary unit for the purpose of is also making the house easily accessible for a senior or a child with special need, then we are also able to claim it for tax purposes. The other one I would like to talk about is especially for people that have just bought their house. Now, Canada Mortgage Housing Corporation Eco Plus. It's something that we can take advantage of. Once, for most of us that were just buying our house, we drop about 5%. So if we are dropping less than 20% down payment, we are paying mortgage default insurance, right? So if we pay the mortgage default insurance to Canada Mortgage Housing Corporation, CMHC, which is the organization where most of us will pay the insurance to, 25% of whatever we have paid can be claimed back. If we get this energy certificate, it's just a certificate to demonstrate that the house is energy efficient. And trust me, most of the houses they are building in Canada now, they're energy efficient. So if we can demonstrate that the house is energy efficient, we can claim, that this mortgage insurance, for someone that pays, let me just give you an idea. For someone that the house is about 460, 470, you may not be paying nothing less than about 16, 17,000 for your mortgage default insurance. 24% of that is more than 4,000. So meaning, and most of these houses, like I said, they are efficient. So just get this certificate, submit the application, and you can get back 25% of that back from the government. So this is a good one that we can take advantage of. If you still buy your house within 2 years, within the last 2 years, it's something that you can still take advantage of now. Eco improvement, yes, ACMHC eco improvement. That is also 25%, but that is if you intend, probably you bought a relatively old house and you want to make some improvements to make them energy compliant. Whatever you have spending to improve the energy efficiency of the house, you can claim 25% of that also. So just for us to note that. Then whilst they're talking about the housing benefits, we can also take advantage of our, if, like I said, first home savings account, I've spoken about that, having 8,000, saving there, getting your tax refund back, and when you're ready to buy your house, withdraw your 8,000 without paying any tax. Home buyer's plan. Home buyer's plan is tied to your RRSP. You have sufficient money in your registered retirement savings plan. You cannot take it out until retirement, right? If you take it out, you pay tax. But when you want to buy your first house in Canada, you can go into that account and borrow out of it. You know, you don't have to pay any tax, and you can. Government will give you 5 years moratorium period. Within the first 5 years, you don't have to return it. But after then, you will spread it over a period of 15 years, and you'll be returning it every month. So it's another one that we can take advantage of. Then GST rebate, GST housing rebate also is an opportunity for us, just for us to know when you're buying a house and you're paying GST on the house, automatically the GST on that house will be refunded by the government. But sometimes some of these builders will put it in the agreement. You would have signed it, you don't know that the GST is coming to them. So, but that GST really, you can get it back as a rebate. So depending on the agreement you have with your builder, whether it's coming to you or it's coming to them, you can just watch it when you're signing your agreement with the builder. Then when you're also buying an old house and you are making some renovations on the house, you are, getting things to fix and all. GST on that also can be claimed under this new housing rebates. Just for us to know, Canada's workers benefit, that comes automatically once we file our taxes, so I won't dwell much on that one. EI is also something that we can take advantage of, especially for people that are in between jobs. So when we are in between jobs in Canada, and you have worked for at least 595 hours before possibly you ask to, you are let go and you are now looking for another job, you can file for your employment insurance, right? And so that you can be sustained for 9 months while you are still trying to get another job. Then that can also be claimed, probably the individual is a bit sick and is trying to recover for a extended period of time, they can also claim EI. They can claim EI. We can claim EI benefit also during maternity or parental. Want to take some maternity leave, you can claim EI. Or you want to take some time out of work to be able to take care of some of our parents or family members that really need that support at that time. We can claim EI. I've spoken about Canada training credits, Canada apprentice loan, just for people that they are into trade like plumbing, welding, all those kind of trade, and you want to go for an apprentice to learn. You can take a tax-free loan from the government, 20,000, tax-free, to be able to support you also. For students, we all know our ESPs, so I wouldn't want to talk much on that because of our time. Then for seniors, I will just talk briefly on something for seniors. For our seniors, they can do, we all know that Canada pension plan, we can take advantage of it, old age security pension, but I want to quickly talk about Canada pension plan. For some of us that we have a family, seniors that possibly we are citizens and we bring them in as on PR basis, right? If they are still within the age of 65, we can employ them by ourselves. Am I live now? So for if they are still within 65 years of age, can we hear me? So it's possible for us to employ them, pay them salary, do CPP for them. Once they were able to drop at least one CPP for them, they are entitled to CPP pension from government forever in Canada. so available. Because of time, I think I'll just stop here. Thank you so much. Possibly, yeah.
Praise the Lord, church. Are we still in tune to be able to take question and answer? Because the ushers are already telling me that this is 12 o'clock. I don't know if we have food in the house for today. Otherwise, I'll say let's have some snacks and take some questions. Or, okay, let's do it that way. Good. Maybe at another time. But then, a lot of these questions, people may have forgotten. Right? Okay, let's do it this way. Can you please write down your questions? We will give it to our brother who will find time to answer it. As soon as the answers are available, maybe we'll just find a time during one of the services to present the answers on a slide. Then you would know, by the time you see those answers, you will know that your question has been answered. Then you can take it. I think that might be a way out because of time now. Is that great? Let's give the Lord a hand. Let's thank God for this man.